Good morning. Today's Wednesday, July 10th. And before I get into anything here, I want to clarify my SDS trade. I must have said a few things that were that didn't make sense, or I must have just made a mistake a few days ago when I outlined this trade. Remember, SDS is the inverse S&P 500 2 times index ProShares fund, as you can see right over here. Okay. Just to reiterate, I'm long. I bought this at $98, okay, $98, and, I'm sorry, nope, see, I've reversed it, $38.95. That's what I must have done the other day when I recapped. So I bought it $38.95. My initial stop loss on this trade is $37.45. Actually, the market would have to close below 37.45. So I'm risking about a $1.50, possibly more. It just depends on where it would close. So again, I am long at $38.95 right in here. My initial catastrophe stop loss on this is a close below 37.45. So hopefully that will clarify some things here. What I want to show you is Apple. I want to show you a really, really, really good trade setup that I like doing on stocks. All right. This is a really good setup here. Okay, it's a good trade setup, and I know you can take something from this and maybe start using it. But this typically happens in the first. I look for this trade in the first half hour when day trading stocks. Now, again, I know a lot of you don't day trade, don't have the inclination or the desire to day trade. But I'm going to show you this trade anyways. Okay, it's a great trade. And this is on Apple. This is a 3-minute chart, a 3-minute Apple chart, okay? So when the market opens up, okay, this is where the market opened up yesterday, right in here where I'm circling. So what I'm looking for immediately is for the market to immediately test the prior day's high or low. This is the high of the prior day. This is the low of the prior day. You'll notice that I have a white horizontal line on my screen right here. See this? So as soon as I get a retest in that first half hour, which I got right down in here, all right, I look for the retest. I need for the market to actually touch the prior day's low or penetrate down through it on a single bar like it did yesterday right here. Once I see that, I will immediately look to buy the market as it takes out the high of the bar that tests the low. All right, so I'm looking for that test. It tests the low. It takes it out marginally. Now, I don't want to see a big, huge move down through the low or this trade is null and void, okay? So the market needs to come down, at least touch the prior day's low, and it'll go a little through it like it did yesterday. You'll see this last green bar that you see right here. It touched it. It went down through it. If you notice, on that particular 3-minute bar, it opened and closed at in the top quarter of that range, which is like a reversal bar anyways. My trigger, okay, on this type of trade is to buy 20 cents up through the high of the bar that actually tested the low. Okay, you see this? I know it's small in here. Enlarge your screen so you can see this bar. The market came down. The last green bar that you see down in here, right here. This white horizontal line represents the test of yesterday, of the prior day's low here. It went down through it, so I'm buying as it takes out the high of that 3-minute bar with an initial stop loss, an initial catastrophe stop loss directly below the low of that bar. Obviously, that initial stop loss is placed after you get filled with the buy order. So this is, right? This was a great trade yesterday. And again, I want to outline this for you. So again, in the first half hour, I'm looking for an immediate move up or down. In this case, down. It took out the low of the prior day on a single bar. Then I'm immediately looking to buy it up through the high. Once I'm filled, then I go ahead and I place my initial stop loss directly below the low. Now, this is an expensive stock, right? I like to use volatile stocks. I'm going to use a 20-cent move up through the high. So my buy yesterday was 411.60. When I was filled, my stop was 20 cents below the low of the trigger bar, the high bar, or the bar in which I went long up through the highs, my initial stop loss on that was $414.42, 20 cents below the low. My risk on this trade, my initial catastrophe stop loss was only $1.42. My first profit objective needs to be at least 2 times my risk. So if I'm risking $1.42 2 times, right, I'm looking to make 2 times that, right? 142 times 2 is $2. I'm looking for a profit of $2.84 minimum, right? 284. That puts my first profit objective, right? That puts my first profit objective at, all right, I made a mistake here. Went long at 411.60. My initial stop loss, I'm totally wrong on this, 410. 410.42. Okay? 20 cents below this low, 410.42. So if you got a chart, pull it up. The buy was at 411.60. Initial stop loss 410.42. Risking $1.42 on this trade. Again, on a trade like this, I need to see the first objective at least twice as much as I'm risking. So I'm risking $1.42. 142 times 2 is $2 and God, I'm all discombobulated here. $2.84. Add 284 to 411.60, and that puts you at 414.42, which actually puts you right up in here, right between the 50 and 200 exponential moving average was the first profit objective. This is an area in which some resistance may come into play. Well, as you can see, the market continued to rally. So after you take profits on your first objective, or you can take it all there. I mean, it's a high probability trade, and it's a 2-to-1 risk to reward ratio. So it's a really good trade. So those are the guidelines on that trade. Let me show you the other trade yesterday, which was a really nice trade. The market ran up to this high. Market was kind of in a range right here, right? This is a little trading range. Market broke down through the range and created one of my setups, right? Look at that inside vertical bar. Look at that second white bar right here. A very, very low risk entry, up 20 cents up through the high of that. The entry on that was 418.87 with an initial stop loss directly below the low of the prior bar. And that was, 418.07, so 417.87. I was risking 1 point on this trade, just 1 point to make at least a point to 2. And as you can see, the market took out that high right there, initial stop loss right there. Market continued to move up. Really nice trade. But again, this is the trade that I really wanted to teach you today because you're all familiar with that inside pattern setup. But it was a beautiful setup yesterday. Okay? A beautiful. Now you might be looking at this going, why did you take this? Well, it was in the middle of a range. Even though the trend was up, we had come down, back up. Look at, we retested this high. We failed and came back down. So why would I be buying it right here automatically? No, not at all. Okay, so this is the trade I wanted to point out. Again, quick recap. Market opened up, came down immediately, tested the prior day's low right here. So I'm going to take the bar that actually tested that low. I'm going to look to buy up through that high with an initial stop loss directly below the low of that bar, right? And I'm looking to make at least 2 times my initial stop loss. And then you can trail up the remainder or take it all off at the first profit objective. It's that simple, okay? All right, have a profitable day. Hope that helps. Hope that gives you another tool in your toolbox. Bye for now.